Welcome to the trade management section of the Renegade Forex Smart Money Concepts trading course. And in this section of the course, we're going to be talking all about actually managing a open trade. Okay, so this section is not going to be so much about strategy. It's going to be more so about, let me back up. It's not going to be so much about the strategy of like actually looking at candlesticks for entries and like supply and demand and all that. It's going to be the side of your strategy in terms of actually managing open profit and loss, or an open trade, in other words. And so we're going to be talking about take profits and partialing. We're going to be talking about like moving your stop loss and at what point you do that. And then we're also going to be talking about taking losses that you got confirmations for to be a winner, and how to manage that. So in this section, it's going to be a lot more about the actual money management side, or not even the money management side, just the trade management side, and how to do that going forward. And so in this video, we're going to talk more specifically about take profit levels and also partialing on your broker, and like how to actually, if you are going to be someone who actually takes a partial at some point on your trade, or if you hold the full volume. And we'll talk about the differences and the pros and cons between all that in this video. So first of all, if you are a totally new trader, we have that new trader section in the course where we talked a little bit about take profit levels and everything. This is for anybody who's not aware, take profit is what actually closes your order for however much you've made in this. Stop loss is for however much you've lost. Take profit is for however much you've made. And so your take profit is usually something that I would recommend. I can't obviously give you financial advice, but I can talk about what I do and how I place my take profit, and then give you scenarios for what you can do in order to manage it, and the different options that are available to you as traders. And so what I do personally is I would be, for example, trading, and I don't want you to get, again, I don't want you to get caught up on the time frame examples that I'm using. Again, this is happening on all time frames all the time. It does not matter what time frame you're trading. I'm just talking about my experience and what I do in these examples. And so for example, I'd be trading like the 1 minute and the 5 minute and the 15 minute here. And this, for example, could be a 15-minute high. And this is maybe a 5-minute refined demand zone. And I just have a pending order right here. And my take profit is at that 15-minute high. And for me, what I do is I take a 90% partial at this high, right? And I leave a little 10% running to see if I can get the next technical level or the next high, or whatever my bias is telling me for the higher time frame. And that's what I do on every trade. Same thing for a sell. This is a pending order on 5 minute, for example, and I'm targeting the 15-minute structure. I then have the partial of a 90% partial, or the level of a 90% partial at this low right here. And as soon as price crosses over it, it closes 90% of that order. And I then leave that little extra 10% on as a runner, again, to target, the next lower low or a different technical level. Maybe that's some type of swing structure, on the left of the chart somewhere. And so that's what I do. And there are going to be people who come in and say, well, I don't want to do this, or I do want to do that, or whatever. And that's totally fine. And that's what I'm going to talk to you today about if you are unaware of these topics. And so there are going to be people, for example, the next example would be people who just close 100% of their order right here. Okay. You say, why would I want to try to hold that the rest of the day or throughout the week or whatever? I don't want to have to think about it. I just want to be done with trading. That's an option. You can do whatever you want to do. That set your take profit up at this high for 100% and just close it for 100% of the order. But I ask you, similar to the last video talking about the downside of confirmation refinement, is if this just blows past your take profit and continues running for, instead of 5R, and it turns into a 10R trade or even a 20R trade, because you are catching the, you're now aligning with the higher time frame trend, are you going to be upset that you close your trade right here? Are you going to be upset that you're not in that move? Well, that's something that you need to ask yourself. And through experience, if you're a new trader, you will come to learn on your, you'll come to understand your personality type and how it fits into your trading. And so now I want to talk about some of the other examples. And so some of the other examples are doing a fixed R take profit or a fixed R partial. Okay, so let's just stick with the pattern that we've been doing, and we'll talk about the partial first. So if you are the type of person who says, I just want to take a, I just want to take a partial like really quick and then target the rest of this volume at this high, that's totally fine. What if I don't do this, and I wouldn't necessarily recommend doing this, because it then, when you're doing back testing, when you're doing your homework, it can then get really confusing on like how much you would have actually made in this trade, for example. So let's say you have, you risk 1% on this account at this area here, and you're the type of trader that says, I'm going to take fixed R at, a 3R gain, and I'm going to close whatever. I'm going to close 50% of that order, and then I'm going to close the other 50% at this high. Well, how much did you make on that trade? It requires doing a lot more math, because you are now only making, you'd be making what? 1.5% gain here when you close 50%. And then the next high would be, I don't even know. I'm not even sure how to do the math on that, to be honest. Like, I'll leave the equation below this video because I'm doing this live on the spot. But yeah, I will look that up and remind myself how to do it and then leave it below. But that's the point that I'm trying to make. It's like, okay, if you're going to complicate it that much, in my eyes, that's complicated. And you also have to then think, okay, well, every trade I take, I'm drastically reducing the amount of volume that I'm carrying to that high, right? Because that does not become a 1 to 5, 1 to 6 R trade. That now becomes much less, whatever that math is. And so, let's just say for the easy numbers, it's now a 1 to 3 trade instead of a 1 to 5 or whatever. So that's one option, is taking a predefined partial at a predefined reward level. So 1 to 3, maybe you're trading bigger ranges. So 1 to 5, 1 to 8, 1 to 10, whatever. It's totally up to you. But using instead of, so in this method, just to like elaborate, you would not be relying so much on technical levels as you would be for just that predefined reward level. So like I've already said, 1 to 3, 1 to 5, etc. The next thing would be closing the entire volume at a predefined R. And so for a long time, this is what I was doing. And it works well to help you increase your hit rate, but you also have to understand the expected R for the time frame that you're using. So like if you're using only scalping the 1 minute and 5 minute, and you're trying to hold your every single trade for a 1 to 10, that's not usually going to be as realistic as holding it for a 1 to 3 or a 1 to 5 or something like that, right? So I used to really focus a lot on just seeing the confirmations here and then just holding it for a 1 to 5, and that whether that was just below this low, I would close 90% of my order at this 1 to 5, and then hold the rest of that for longer to a higher technical level, or trying to swing it for the week with that 4 hour and daily structure. And so if you're using predefined R for taking a big partial or closing it all together, like other people might just say, okay, I'm going to close 100% of it at a 1 to 5 gain. That level may be below highs like this, right? It may be at perhaps the opening of this demand zone that's forming right here that you close it at. Or maybe you're trading, again, maybe you're trading big ranges using like indices or something, and your ranges look like this, and that high is way up there, and maybe it is, on the 1 minute, maybe it is like a 1 to 10 or something for that high, but you're closing it at a 1 to 5 to help better your strike rate, then that's totally fine. There's nothing wrong with that, and you can do that. However, again, similar question, are you going to be frustrated if you close 100% of your order right here and price runs and has the biggest rally that you've seen in days or weeks and you're not in it? that's something that you need to ask yourself and adjust your trade plan accordingly. Okay, and so that's pretty much it. The last thing I wanted to touch base on is that there are methods of closing a really small partial. So if, for example, I think that the math, again, I'll update this below this video, but and leave the like actual hard calculations. But I think that the math is if you close 25, so for example, if you risk 1% of your account on this order right here, so you have 1% risk to the stop loss, and you allow your trade to go up to a 1 to 4, and you close 25% of that order, then this trade is now break even, right? If it comes all the way back down to stop you out, then that would be a break even trade, and that allows you to not have to move your stop loss and secure that break even a little bit more quickly. Because like we'll talk about in the next examples in the next videos, is going to be when to move your stop loss if you ever do move it. And so this is going to be actually a great example to lead into that video with is retracement, entry, continuation at a 1 to 4, close 25%. And that would be a break even trade. And then you can then hold it, for this is not a great example, but then hold the rest of it for that take profit. Or if you're someone who's targeting only that 4-hour high and you're going to hold that full volume to the 4-hour high, you can do that because, or you can do that a little bit more comfortably because it's now a break even trade. The other way to do that math would be, 50% at a 1 to 2, which obviously you're then leaving a lot on the table. And so, yeah, you would need to just find out what you're comfortable with in terms of making that a break even trade and how much volume you'd be willing to sacrifice if that's something you want to do. So yeah, that pretty much sums it up. I personally am kind of getting to the point where I'm just waiting for the market to give me what it gives me and then watching for lower time frame reversals. And this will come with time and dedication and practice to where you can get that comfortable as well. If you're a brand new or intermediate trader, I would recommend just doing something like what we've talked about in this video. More specifically, I'd recommend at least considering using the next high as closing, at least like 90% of your order, if not 100%. Now, the experienced trader in myself, if, looking back, I wish that I would have just allowed myself to follow to that 4-hour high or to that next swing high. But I think that for most people coming into this course, that's going to be holding too much. And then, if the trade comes back up or comes back down and stops you out and without hitting that swing structure or whatever, I think it might just be a little bit too much for people that are new traders to try to hold longer than just that next structure. So hopefully that makes sense. We'll see you in the next video.